In other news, Arkaea Media Group, in collaboration with the NYSE, published the second edition of its Space and Defense Market Update, providing an overview of the key trends shaping the sector. Check it out.
All right, we are back with the second edition of the Space and Defense Market Update here from the New York Stock Exchange. I'm Mo Islam, CEO of Arkaea Media. We're a news media brand that covers critical technologies and national security. I'm here with my co-host, Jack Kerr, who's our research director.
Good to be here, and just after New York City's first blizzard in 10 years.
Yes, we have our snow boots on, so hopefully we can keep the camera angles above the waist. Okay, so we have a lot to discuss. York's IPO, the general trend of capital rotating from software into hardware, Blue Origin's big month of announcements. But let's start with York. Since our last show, we have yet another space IPO. In this case, it's York. Went public at the end of January. Tell us a little bit about who York is and how did the IPO go?
Yeah, so York is a satellite manufacturer. The company raised $630 million here at the New York Stock Exchange. And they are a government contractor through and through. About 95% of their revenue comes from that government customer, which says a lot about where the industry is right now.
I think it speaks to a lot to sort of the narrative in public markets and how it's shifted. You know, a couple years ago, it was all about commercial strategies and commercial revenue, and now the conversation is much more about durability and government dollars. So effectively, like backlog, contract visibility, and whether you are showing up in the right kind of line items on the budget. And when you zoom out, it makes a ton of sense. The fiscal year 2026 NDAA was something like $900 billion, which is a record. So that's the backdrop that investors are underwriting against. So it's a market where the defense exposure isn't really like, it's not a side benefit to the story anymore, like it's become the story.
Yeah, and historically there's been a stigma around this defense exposure, and partly that's due to some of these aerospace and defense primes that have generated a lot of revenue, but have had a little bit of trouble converting that into a substantial profit. So that's a lot of the arguments for these space tech and defense tech companies, is that they can come in and introduce new and advanced manufacturing practices and operate a lot more efficiently, and in turn can generate more meaningful profit. So you look at York, for example, we're just talking about York. If they can come in and they can execute at a higher operating margin, they just need to carve off a slice of that government revenue, and they can generate pretty meaningful profits.
Exactly, and you're actually starting to see a lot of that logic apply to private markets. Deal activity this year has started with like a huge bang.
Yeah. I mean, the SpaceX xAI merger is the big one. SpaceX being an AI company is kind of wild after 20 years of them being around, but it really solidifies SpaceX's bet on moving compute and moving data centers into space. So we have that merger. There's a number of other deals in space that have come out in the last couple months. We have Cesium Astro raised $470 million for its satellite communications tech. Stoke, which is developing fully reusable rockets similar to Starship, raised a $300 million extension round. Commercial space station builder Axiom also raised $350 million. And just the other day, Arkaea raised $100 million at a $1.3 billion valuation to further roll out its communications technology.
Right, and you're also seeing notable raises on the defense side, and just to name a few that I think are more notable, like Skyrise, the flight automation startup, raised $300 million. Novion Magnetics, which is a rare earth magnet maker, raised $215 million. And then across the pond in Europe, Harmattan AI raised $200 million, so autonomy startup. So the large critical industry funding rounds have really picked up, effectively like right where we left off last year.
And we were discussing this a couple weeks ago, but there are a number of macro tailwinds that are supporting these industries. But this year in particular, there's the big one is the AI-induced investor pivot or rotation out of software and into hardware as investors kind of try to find where the moats are. We saw already this year software ETFs are down 25%. Enterprise software stocks in particular have been hit harder, down 30+%. And for decades it was these asset-light, high-margin software businesses that were considered world-class. They had these incredibly high switching costs, and you can generate a lot of recurring revenue because of it. So now investors are questioning those switching costs and those moats. So as a result, they're looking at hardware. And hardware is seen as this place to be insulated. When you're building in the physical world, it's a lot more harder. It's not just a software program. You can be insulated from AI.
Yeah, that's exactly right. I mean, for years, no one wanted to touch hardware, and it's too capital intensive, like low margin, and just in general, just like very difficult to execute. And when you look at like manufacturing, like certification, supply chains, flight heritage, all of those things are actually like deep moats that are not easy for AI to erase, like at least anytime soon. So investors, I think, are asking a very different question now, which is, it's less about like, is it asset light, and more about, is the company solving a strategic bottleneck? And in the case of space and defense, there are a lot of those bottlenecks are pretty obvious. You have like launch, power, comms, autonomy, materials, production capacity. And if you can actually own and control one of those layers, you're effectively infrastructure.
Yeah, and you're also building, or you get to invest in a frontier. I mean, we don't know how fast space will be built out, but I can say for sure it is going to be big. And so we were talking about the moats, this kind of defensible moats that hardware, and particularly space hardware, can have. But you're also an investor can invest in a growing ecosystem that you can kind of create this foundational player, or invest in this foundational player that can be around for decades.
Yeah, well, speaking of that, let's talk about Blue Origin. So Blue is starting to look less like a single product company and more like an integrated infrastructure player.
Yeah, and so Blue Origin was founded 2 decades ago, and they've, no offense to any Blue Origin employees, but it seems like they've been in hibernation for those 2 decades. And then all of a sudden last year, things flipped. In November, they landed their New Glenn booster for the first time, which was a big milestone. They then, like a couple weeks later, announced they're building a larger variant of New Glenn that'll be 4 times the size, 4 times the capacity as Falcon 9. And then just in the last 30 to 45 days, they had a blitz of announcements. There was the next New Glenn launch, which should be happening in the next couple of days, will be powered by the previously flown booster. They're posting jobs about working on a reusable second stage, which is a big deal. They paused their suborbital New Shepard rocket to go all in on the moon. They're working on a smaller lunar lander variant to beat SpaceX to the moon as well. And I know this is a long-winded list, but really the big one here is Blue Origin announced its TerraWave satellite communications constellation, which will give them the vertical integration where they can sell through. They have New Glenn as the rocket and the infrastructure, and then they can sell through on the application layer. And this is something that we saw SpaceX do a phenomenal job at with Falcon 9 and selling through Starlink.